Okay, testing, 1, 2, 3, testing, 1, 2, 3. The Wayne in Spain falls mainly on the plains. The ants in France stay mainly in your bonds. Good morning, happy Friday, happy non-farm payrolls. How are you doing? How's your month been? This is non-farm payrolls, number 151. It's something else, huh? Thank you, moderator. FX Street has the best moderators in the whole world. So thank you for being an excellent moderator. Thank you, everyone, for being involved today. What I'd like to encourage you to do is ask questions. Participation. So I'll let you be the boss. I mean, today we will cover technical analysis and fundamental analysis. In 1 hour, there will be a news event. Okay, all that, that's all there. This is a 3-hour webinar, which is fairly unusual, even though I've been doing it for almost 13 years. It's still unusual, right? So we can go through the normal routine. We can go through the news. We can look at, we can respond to how the market responds. And then we'll probably have an hour, hour and a half, where I can cover anything you want. You're the boss. I am the humble currency trader that just happens to have been doing this most likely longer than you, so I can just share my experience. I mean, why would I do that? Well, it's pretty simple. It's a symbiotic relationship. I mean, I work with Traders Way, and they're a boutique foreign exchange trading firm, and they look at these webinars and the webinars I do every single day as investing into your education up front. And when you feel ready and feel confident as a trader to trade real money, you will upgrade your demo account to a live account. And then together build a long-term business partnership. You click the button, they execute quickly, spreads are competitive, and the rest is easy, right? So that's why I'm here. I'd like to help. Let's get involved. So we got non-farm payrolls coming up. A couple of 100,000 jobs, $1.80, $2.10. Shouldn't matter that much, right? The thing is, we're near full employment, sorta, and the economy is pretty decent here. Okay. I think the risks are exogenous, really outside the U.S. But anyways, we'll go through the charts. We'll look at the dollar pairs. We'll look at the yen pairs. We'll respond to the news. We'll probably look at Euro USD unless there's something else obvious. And then I'll teach you whatever you want. We can cover technical analysis or fundamental analysis. Most likely we'll hit on both. If you're new to me, by the way, my name is Wayne McDonell. I am the Chief FX Market Strategist for Traders Way. My style is predominantly trend, if I had to categorize it. I like to be in trades longer than 20 minutes, a few days, a few weeks, if possible, depending on the situation. One may call that a swing type trading system, but really I look at trend, and the trend could be a few hours, a few days, a few months, depending on the time frame that you're looking at. But I also can scalp, I can spot, I can do all that. So, we can cover pivot points, support and resistance. We can cover price action. We can throw down some moving averages and all that kind of stuff. We can look at oscillators. So we can talk about spot trading, scalping, swing trading, position trading, whatever you want. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Also, if you visit tradersway.com and open up at least a demo account, every single morning, Monday through Friday, for about 90 minutes, I conduct a live analysis of the market for Traders Way clients, and it'd be really great if you could join us. So visit Traders Way and open that demo account. So good to see everybody, and I recognize almost all the names. So thank you for the loyalty and respect that you show me every day, and thank you for all the work I know that you guys are doing to improve as traders. We're all there. I've been doing this a long time, and I'm still trying to improve. But I really do enjoy being a trader. Okay. So what should we do? Dive into the charts? I thought maybe we can deconstruct a chart and go through maybe how to take a look at that. I think maybe we could also, you know what, let's start by talking about the model. Okay, so we're expecting a couple 100,000 jobs, right? Well, how do you get to that number? Well, several years ago, maybe, 5 years ago, I wrote an article for FX Street called How to Prepare for and Trade the Employment Situation Report. And then from there, they got some other experts together and they expanded on it into even greater detail. So FX Street has wonderful resources on how to do this number. But I shared first, I was the first one to share my model on how to come up with the headline number. One of the pieces of that model is to look at the employment subcomponent of ISM services, but that comes out on Monday, I think it is. So that kind of messes that up. What about the Challenger Christmas in Gray report? Thank you, moderator. See? Evidence right there. World's greatest moderator. There's nothing moderate about our moderator. Extreme moderation. Okay, so because that subcomponent comes out next week, models are going to be less accurate. You can, a shortcut if you want is you could look at whatever the market expects in headline. So 200,000, I think I heard on Bloomberg. 200, great, 200. And then you take whatever Challenger and Christmas and Gray have found for mass layoffs, and that's all that is, just layoffs. Anything more than what? Is it 20 jobs from a company? Anything more than that, that's considered a layoff. So anyways, they track that. So you subtract that number. So if the headline is 200 and Challenger, Christmas and Gray reports, 20,000 in mass layoffs over the month, then I would suggest looking for $1.80. But let's step back even further. We're talking about fundamental analysis. Okay, there's more to fundamentals than just news events. So this non-farm payrolls is not fundamentals. It's a news release. Okay, it will create volatility depending on how close it is to the actual number. But at the end of the day, whether it's 220 or $1.80 or 200 or something near that, it doesn't really matter on the long run. Because what we are looking for is how does a central bank interpret this information? Because they're the ones that manage money supply, which, to say it differently, is the policy for which they manage the currency, right? And that will influence the economy. So if it comes out somewhere ballpark $1.80 to 220, I mean, dude, that's a lot of jobs. I'm giving it a lot of leeway. Well, it's because the policy is in place and it's a longer term policy. They're thinking 6 months to a year in advance, maybe even more. And so if it's roughly in the ballpark kind of area, it shouldn't change their policy. And that's what we're looking for. If the news is shocking enough where they might have to reconsider their policy, then you're going to get a true fundamental change. And that's what fundamental analysis is. You can look at to get to the headline number, you can look at let's say the last 12 non-farm payroll headline numbers and the last 12 revisions. And then you can look at weekly jobless claims. You could look, at a lot of different things. Like I said, the employment subcomponent for ISM. You can look at all these trends, and it's not likely to deviate very far from the trend. That's why it's a trend. What the Fed is concerned about is where are we in the business cycle, right? So like if I were to draw this, let's say this is potential GDP. It's sloped, okay? And the economy it's either above the full potential or below the full potential or back at potential, right? But the Fed's trying to figure out where are we in this cycle of overheated, right? So like booming economy, recession, right? Depression, booming economy, right? Recession, depression, that kind of stuff. Where are we in this cycle? Are we up here? Are we up here? Have we rolled over? A lot of people are freaking out with the stock market coming down recently, right? Right? The end of the world, the end of the world, the end of the world. And I'm like, no, it's actually just rebalancing of portfolios. But if you want to freak out, go ahead and freak out. But the Fed is trying to use this information to determine where we are in relative to long-term potential GDP or productivity. Okay? And there's no doubt we're mature in the cycle, but we're probably not at a point where we're at the end of the cycle. There's a lot yet to go on. So, for example, where is Europe in their business cycle relative to the United States in their business cycle, right? And obviously, Europe is much earlier in the cycle. They're not at full potential GDP, and the United States is probably beyond full potential GDP. That's why you see interest rates going up. If the economy is already above potential GDP, there's no reason for stimulus, especially emergency support. So if it comes out $1.75, 175,000 jobs, that is disappointing on a headline level. You want to look at the revisions and then look at the trends and where are we in the trend? Is the trend accelerating, decelerating? But if it comes out of 160,000 jobs added, will the Fed really slow down the interest rate hiking cycle? If the market's priced in 3 rate hikes, are they really going to say, well, you know what, maybe we don't need that 3rd rate hike. Maybe we only need 2. And all of a sudden, like if they say that or even hint it or people think that's what the Fed is thinking, then you'll get a dramatic fundamental move, right? And that's where non-farm payrolls is super dramatically important because it is a report card, for the economy. But right now, it seems to me, it's arguable, whether we're at full employment or not. I don't think we're actually at full employment. I think we're just not counting a whole bunch of people. But anyways, if you want a job, you can probably get one, right? And if anyone has the argument that we're not at full employment, that we're just not counting a lot of people, and that the economy might be booming, but we're also suffering from sort of obsolescence in the workforce, that the robots are going to take over. One thing to look at, which is not going to argue against you, it'll probably argue for you, it's called the COLA model, I think it is. And it has to do with the ratio of jobs advertised to I think jobs advertised compared to something else. I don't know. So anyways, if you look at it going back, 50 years, jobs advertised ebbed and flowed with the economy. So when the economy was going down, no jobs were available. So no jobs were advertised. And at some point, people start advertising and the jobs come, and people start coming back. And then the economy's booming and advertising is huge. And it might have to do with how many days until they get a job or whatever. But for the first time in like 50 or 60 years using the COLA model, the slope shifted. And everyone went, oh, and by everyone, I mean like people at the Fed. Right? Central bankers went, oh, and that's that's a bigger problem. So I was just at Harvard for the weekend debating universal basic income with some economists, and it was led by a former economist from the New York Fed, the New York, yeah, the New York Fed, the central bank of the United States, New York, and that's really interesting. And some of the stuff like what we talk about, like the off-topic stuff, I think is sometimes fascinating. And so I can literally think of people that work at the Fed now, because I've actually I took a macroeconomics class, and my professor was a senior economist at the Fed. So now, like when I think of the Fed, I think of people, not just like a random institution. And I can see these guys doing COLA models for fun and going, oh, isn't that interesting? I wonder what that means. So anyways, those are the bigger questions. I hope this job number is pretty decent. I want the party to continue. I want the stock market to recover, and it will, and rally this up. And then, I hope China saves Europe. I think the whole world sit around waiting for Europe. When is this whole Brexit thing over? Does anybody know? When will socialism leave Europe? Oh, well. So we need to fix the European economy. Like seriously, we need to stabilize that, and then China will be stabilized, and then Canada, New Zealand, Australia will stabilize. Okay. Well, Anil, which ones would you like to focus on? So I would go to like I would focus on dollar pairs primarily. Okay. Okay. What it means, Raymond, is that the people that need jobs and the jobs that are available do not match. So like a friend of mine, she's 40 something. She has 2 kids now, and she had a high-tech job in the Silicon Valley. And so even though she had 2 kids and she was 40 something, she went to Stanford and got a graduate certificate in artificial intelligence. So you take about 6 classes, I think, right? High-end calculus and programming and all that kind of stuff. Plus she had 20 years of experience, right? So anyways, as soon as she got the certificate, she got hired by Apple. Boom. Just like that. So look, if any of you guys need a job outside of Forex, why don't you just get a degree, a master's degree in artificial intelligence, and you'll have a job in the same day. Boom. $400,000, come work for us. You don't need experience, just a certificate, good enough, let's go. You know what I mean? That's all you need to do. But what if you're not capable of that? What if you're like, you dude, there's no way I'm going to learn artificial intelligence. I want to be a plumber. Well, actually, plumbers are probably filthy stinking rich. Plumbers are the ones driving the yellow Lambos, by the way. So I don't know, so the jobs being advertised and the workers that are available just don't match. There are just not enough AI people. There are not enough blockchain people, for example. I think once again, I think MIT has a program now where it's about the same thing. It's like a certificate in blockchain. It's about 6 classes you can take in blockchain. You do the 6 classes at MIT, graduate level classes, and you get a certificate. I'm sure you could just walk into the street and say, "Hey, I have a master's level education in blockchain." You'll find a job. So that's what it means, okay? Okay. All right. So what are we going to cover today? This is oil here. I've been waiting for oil to rise. I may be giving up hope. Gold, as you can see, we had coming up and then down. Well, I got half of that right. And then, yeah, there's a lot going on, lots to set up. We're waiting for non-farm payrolls. Obviously, on the short run, the volatility can affect the markets and stuff. So what we want to do is look at prevailing trend, potential change in trend, because I think we predicted about 6 reversals last week, and I think 5 of them have reversed. So we could take a look at that change of trend and then look at if NFP supports that change of trend, if the volatility from NFP, let's say, breaks support or resistance, will there be follow-up trades? And what about Monday? Some of the best NFP trades are on Monday, not Friday. Okay? And then Neil says, I expect the momentum to blah, blah, blah. I don't expect anything. I expect to do my job, set up trade plans, and that. But what the market will do, not my problem. Okay? Now, if I'm a bull, I want to start looking for dips and buying at support. If I'm a bear, I want to sell rallies, right? So I have to be ready for that. So really, really the key here is we're setting up what'll happen post news, sure, but we're also trying to set up what's going to happen next week. Do I look at the dollar index? I used to watch Dixie pretty close, like almost minute for minute. But then I find that it basically tracks the euro dollar quite closely. I don't trade futures anymore. I traded futures many, many, many years ago. Let's say about 10 years ago. And I started trading stock futures like the S&P 500 and DAX and oil futures a lot. Dixie, 10-year T-note, so quite a bit of stuff, right? And then I handed my trade history to my accountant at year end for taxes, and we filed for extension. So this started in April. By the end of November, my taxes were finally done. I'm not joking. They were this thick. Hundreds and hundreds of pages. And it was thousands and thousands and thousands and thousands and thousands of dollars. And I'm like, holy, what is going on here? He's like, well, this part is your foreign exchange trading. And this is your stock index futures trading. But here's your stock index futures trading for outside the United States. And by the way, here's your oil trading. And then here's your 10-year T-note trading. And they had different tax treatments and required different forms, different filings. And then, the interest you made on your carry trades, well, that has to be, and I'm like, oh my God, it was so complicated. So I'm like, you know what? I'll correlate everything to Forex and I'll just trade Forex. Okay? So that's how that got there. So do I trade the Dixie? No, but in a very short order, I can pull up a set like this, okay, and see the US dollar. Okay? And then make a decision. So do I trade it? I don't want to trade the futures. Do I use it? I don't use it anymore, but you certainly could. There was even a time when I made a dollar index as an indicator. It looked like an oscillator. I don't even know if I have it anymore. Instant indicators, custom. I used to have one. No, I don't think so. Template. This was a long time ago. Oh, maybe I have one. That's a Swissy index. Let's do those. Huh. How did I do this? So that it's stuck on Dixie. How did I do this? Oh, let's figure this out. Should change it. Okay, there we go. There's your dollar index. You're welcome. You know what? Hang on. It's getting warm in here. Hang on. So there you go. There are other ways to do it. My favorite, though, is just to look at a scan, and it doesn't take very long to figure out the dollar's weak. That's all. See, pound dollar up, weak. Okay. Aussie dollar up, so the dollar is weak. USD CAD down, dollar is weak. Euro USD up, so dollar is weak. I don't need this, but you can build one. So all I did was look at euro versus everything. No, dollar versus, yeah, euro versus, anyways, you can make your index. I did that a long time ago. Okay. All right. So let's just go back into here and let's talk about what's likely to happen today and my chart setup, for example. What is that? Oh yeah, that's old. Okay. Actually, let's go here. Let's go here. Let me simplify this. You're going to see a lot of my charts have a lot of lines on them. And please don't heckle me over it. Let me just explain so that you understand what the lines mean. Okay? I'm sorry, Nia, I don't have an Indian rupee point of view. I'm sorry. So anyways, the two things I'm looking at in this situation is price action as a leading indicator, and I'm looking at pivot points as a leading indicator. Okay. Okay. So that's a big part of it. Now you may see I'll have lots of other lines drawn, and those are all trade plans and such. But these green and pink areas are targets. Red, right? They're light red. The light red areas are places where bulls should take profit. So that means bulls are buying up into these points and should stop. Doesn't necessarily mean sell. Now you could, and there you may, but that's not the point. The point is, if you're a buyer, these are places to take profit. In fact, in my book, I call them pivot profit zones. And I came up with that name at a Pete's Coffee in San Mateo, California. So if anyone else calls them pivot profit zones, they're ripping me off. And it's been known to happen. But I remember inventing the name. So anyways, these are pivot profit zones. And the reason I called them that is I wanted people to understand their targets. They're profit zones. They're not sell zones. They're take profit zones. Okay, and I think pivots are mistaught quite a bit. So you got to keep that in mind. Okay, so that's, and then this dark gray area and these big fat lines and stuff, those are just monthly pivot points. So I'm looking for clusters and overlaps and stuff, confluence, if you will. Now, the second part of this, and probably even more important, is price action. I'm looking at things like what used to be support could now become resistance. That's a leading indicator because I knew that yesterday, the day before, and the day before that. So a trend trader, for example, a bear, is probably going to want to sell soon because they're looking at it from this point of view. Okay, what do they want to do now? I call these role reversals because it suggests that what used to be support will become resistance. Role reversal. Okay. So it's a combination of leading indicators. Since we knew this yesterday and the day before and the day before that and the day before that and the day before that, we have almost malice aforethought, if you will, right? You're thinking ahead. No malice, just forethought. Okay, and now that euro dollar's here, now of course non-farm payrolls can mess all of this up, but if you're a pure technician, what you should be doing now, if you were a bear, is, you should get ready. So put it this way. What if you were an expert and you were being interviewed on, I don't know, FX Street, and this was yesterday, and they said, hey, so what's your plans for euro dollar? You'd say, well, we're looking to sell it around 114.5. Okay. That's a price. Now, my next one is pretty high up, right? So anyways, 114.5 is where you're thinking about maybe becoming a bear. Okay. So if so, when you get into the smaller time frame, now you start looking for reversal patterns, right? Wait, what is the difference between NFP and private NFP news? I'm not sure what you mean by private NFP news. Okay. So anyways, guys, now you drop into your smaller time frame and you say, I have a strategy around if euro dollar falls around 114.5, then I'm going to sell. So now you just need to have some sort of thing in mind to define what fall at 114.50 means. Okay? Does that make sense? Strategy and then tactics. So now before non-farm payrolls comes out in about 25 minutes, one of the things we can do is identify the levels of resistance in which you might consider selling. Okay? Or the levels of support in which you would consider buying. Okay? So let's do this. Let's delete this. Let's delete this. Okay? Is everybody with me? Who's alive? Let's do this just for fun. Let me know what country you're in right now. Let me know who's actually paying attention. Also give me an idea on how long the lag is. What is it, 20 seconds? Well, Trey Leon, yeah, what you need to do is wait for that to change. All right, so it's about 25 seconds, maybe 20 seconds. Kenya. St. Lucia. Plano. South Africa. Turkey, huh? Nice. Kenyatta. Cool. Right on. Thank you, guys. Mickey's in the USA. Detroit. Cool. Oh, yeah. Thank you, Kyle. Hey, would you guys well, it's not, I guess, me a favor, but, we really need to thank FX Street for hosting these webinars. Like I said, I've been doing webinars with FX Street for 13 years. How cool is that, right? Would you give a thumbs up on the video? Just let them know that we appreciate FX Street and what they do for us. Just give them the little like. It takes no effort on your part. Just do that. Just show them that we care. Okay, so would you agree that this might be resistance, this area here, this whole box that I drew? Okay, let me zoom in a little bit more. Let's define this a little more closely. What is that, 1470 to 14, right? So 114.50 to 114.70 could potentially be a sell zone. Great. What's the next level you'd consider? I'd say up in here. Okay, what is that, 1520? All right, so we have plan A and plan B for bears now. Okay, you sell kind of now-ish, or if the news comes out and all that kind of stuff. Or the next one would be here. Okay, you would sell up there. Okay, so you either sell here, plan A, plan B. Not thumbs up here on the YouTube thing, but I appreciate that. But you just click it, and it's the like thing. I don't know. I think like is YouTube is Facebook, isn't it? But whatever. Okay. Yeah, Crestos is totally resistance. Cool. So anyway, sell here or sell there. Those are called trade plans. Now, you don't just sell the touch. You don't sell the fact it hit 1450 or 1520 or 1500, whatever. You sell reversal patterns on small time frames that happen to take place at or near those levels. Okay. Oh, I see. You have it embedded on the site? Okay. No, they have it embedded somewhere else. That's cool. Sorry about that if I messed it up. Unethical, you're hilarious. I like you. You crazy. All right, so now if you're a bull, what do you want to do? You want to buy up here at resistance? No. All right, so let's start with the basic one. Would you, if it dropped down to here, would you buy it as a double bottom? Around 1300? Now that's 150 pips. That's probably not going to happen today, right? But if it did, it's reasonable to say that might be interesting, right? So let's get a little closer to reality. Oops, there's reality. Nope, go reality. Nope, we don't. That'll be. Look at it coming down already. Where would you buy? Well, you kind of have this going on. Used to be resistance, could be a support. Okay? Right? It's a monthly pivot as well. Where else would we consider? How about plan B? That's pretty mediocre. Just trying to see what that price that is. 1370. That's out in the middle of nowhere. So this one you're buying around 14-ish, 14 and change. Seems pretty mediocre down there, but we'll leave it there for now. We'll see how to play it later. Okay. So this whole area right here is a buy zoning. I prefer it doesn't come back to hit 1400. I prefer it stays up there around 1410. But it certainly could dip and then pop back up. Okay. So that would look something like this. Okay. Oh, yeah. Thank you for asking, Lennon. All right. So last month, I issued a link to download my templates. It worked for about 75% of the people. Of course, the other 25% of the people didn't work, and they freaked out. How do I get my free stuff? So anyways, I spent a lot of money, and I had it all reprogrammed on a completely different system, and it is now available. So if you would like my chart templates, my profiles, my indicators, and my EAs, they are at charts.fxbootcamp.com. Okay, thank you for reminding me. Okay, and yeah, I'm blocked, so maybe the moderator could do that. Charts.fxbootcamp.com. Okay, so if you filled it out last month and you didn't get your pivots and such, please do it again. And you should, I'd be shocked if you didn't get if it didn't send you the download link. Okay? Charts.fxbootcamp.com. Absolutely free. Okay? No, no, Jim, that's next step. But I'll just send that out as an email to people that have already downloaded. It's free. It's free. Anil, it's free. It's free. It's free. Thank you. Thank you, moderator. Anyways, yeah, free. So, cool. So we got about 15 minutes. So we've identified 2 levels of support for bulls. So basically plan A and plan B. 2 levels of resistance for bears, plan A and plan B. Right? So we have a plan A, plan B, and plan C, but plan C ain't going to happen today. It's all right, Jim. We'll get you squared away. Private non-part. Oh, yeah. Oh, sorry. I thought you were something else. Raymond, unless you're truly an academic economist that wants to, debate all these things, it doesn't. To let's say a foreign exchange trader, we're looking at such high level stuff of like, is the U.S. economy healthy? Yes or no? We're not looking for much more than that. We're very macro because we're looking at, all right, if the U.S. economy is healthy, how does it compare to Japan? How does it compare to Europe? How does it compare to the UK? How does it compare to Australia? How does it compare to Canada? That kind of stuff. Okay. So I think you're just too far in the weeds. Now, someone could argue all this kind of stuff. Maybe, especially if you're a stock trader or a bond trader or something like that, then it could have, you're going to be a little more sensitive, and you could use it as a canary in a coal mine for various things. Like for example, so what you might be talking about is that the private payrolls are way down. Maybe, is this what you're talking about? They're way down over the trend has been down over the last 4 or 5 months, I think it is. And this has to do with that COLA report I talked about earlier, where if you do a COLA model, you'll see it's not that there's a lack of jobs. Advertisement for jobs are probably at all-time highs. And small businesses, private payrolls, right? Small businesses are advertising. There's no doubt about it. What you're seeing in the downward trend, private payrolls numbers over the last 6 months has more to do with their advertising vacancies or jobs. They're advertising jobs. They're looking for workers, but they cannot find workers to hire. Okay? Cool. Hey, can somebody tell me, like, can someone that downloaded it that last month and never got the download link, like last month the process failed, if you downloaded it now and then you went through the process again and now you did get the link, please let me know if in your opinion the bug has been fixed. Okay. Raymond says, does it not have impact overall on GDP? Yeah, I mean, it's like one of these things where if we had more workers being productive, that would increase productivity. We just don't have enough workers. Thank you. Sweet. So, Raymond, if anything, it's just telling you we're in a mature market. Okay? That's all. Right on, guys. I'm so happy. I'm so happy. Good. Congratulations. I'm so happy that works. So happy that works. Holy smokes. Good. There is no bug. Arturo, don't worry about it. There is no bug. Don't worry about it. There is no spook. Don't worry. There's no bug. Everything's fine. How come I don't have a bug and everyone else got a bug? I want a bug too. All right, so that's that. And we'll go through. We'll look at other pairs and we'll look at the yens and stuff. The one that has been bugging me lately is not is over here. I've been waiting for oil. Now I said on Monday that or yesterday I said or Tuesday the first. I said on the first that maybe oil will go up because of Iran's embargo taking effect. I was wrong on that. It didn't take effect on the first. For some reason, it takes effect on Monday. Now, why do it on Monday and not the first? I don't know. So I misunderstood that. We're still kind of technically a little bit at support, but I'm not convinced this is going up. I'd like it to go up. I'm going to wait for it to go up. But this doesn't quite say up yet. It's still good. It's just really, really Alamo here. I mean, this is where, so not only is it the Alamo, but like Mexicans have been shooting it with cannons all night and the walls are crumbling and half the people are dead and the other half are bleeding. And, well, it doesn't feel like a very stable Alamo. Arcade Spy, well, I went through the euro dollar, but typically, like, I think a lot of currency traders here already know what currency pair they want to trade. Either they trade the same thing all the time, or they've already gone through a relative strength index, for example, going through a relative strength exercise, and they've already matched up strong with weak. So like Arcade Spy, what I would recommend is you go through all the pairs you like to trade and try to isolate one currency. So like isolate the dollar against all these and discern whether the dollar is strong or weak. And you may say it's weak. And then you say, okay. Then you watch non-farm payrolls. Oh, no, sorry. If US dollar is weak here, go through and figure out which ones are strongest and which ones are weakest. So, for example, is pound dollar higher than euro dollar? And is that range wider than USD CAD is lower? And you start to prioritize. Because what you want to do is if NFP comes out and the dollar weakens, you could say, well, oh, in that case, I want to buy pound dollar or whatever, right? Or Aussie dollar. But if the dollar strengthens, you could say, oh, well, the yen, right? And then you do that. Okay? So you kind of do, if the dollar strengthens, find one or two things you're ready to trade, or one or two things to trade the other way. But what I'm going to do as far as kind of leading you through this is we're just going to follow euro dollar because that's probably good enough for most people here, right? It's 40% of the entire Forex market, so that's good enough. Plus, we have a plan here where there's two sells above us and basically two buys below us. No, Neil, I'm talking about the Iranian oil embargo. Why would you say, like if I was doing an embargo against a country, I'd say, that's it, November 1st, you're cut off. I wouldn't say, well, the Monday after the 1st, on the 5th, we're cutting you off. Like, I would have done it on the first. Okay. Yeah, unethical says do your own due diligence, and I'm assuming you are. I think a lot of people here have been trading for a while, for a bit. Not many people here are fresh off the boat amateurs, right? So yeah, you should kind of know already what you're doing, even at a basic level. Like for example, do you know if you want to buy the US dollar or sell the US dollar? And could you write a paper? Could you write a 2-page paper on why the US dollar should be strong or why the US dollar should be weak? Okay. That should be something pretty basic, right? You should be able to do that. If not, you should put it down as like maybe it's an exercise you should do. So I have a lot of reversals. I think I talked about this at the open on different charts though, not this scan. I think I have it here, and on the yen pairs. But at the beginning of the week, or was it last week, we set up quite a few reversals, all of which have reversed, and they go back to like this, double bottoms and then up. Okay, so you can see Monday was up, down, buy, right? And we're already up here, so a lot of these reversals have matured. Now the question is, will it come down and will it give you a new opportunity to buy a dip? Okay, you need to be making those decisions now. This has nothing to do with non-farm payrolls. You should already have a plan for this to come down. And you can see here, if it comes down, I want to buy it either here or here. Okay, I'm not making the decisions because of the headline number. That's what I was trying to say earlier. It's not the headline number that matters per se. That's just a release of new data. And it would be incredibly shocking for it to be outside of a reasonable data set. Okay, you see what I mean? So a news release, it'll create some volatility. And non-farm payrolls over the last 10 years has only been like, what, 30 to 50 pips? Like, it's not even that big of a deal. What the big deal is if it does get out of whack, out of kilter, because of the short-term volatility, and you have your trades planned in advance, you can say, well, this drop, so this dollar strength is going to be short-lived, and you already know either today or Monday you're going to buy it around 129. You already have that plan. I had that plan yesterday, bro. Okay? So that's kind of where I'm trying to lead you, where you're planning your trades in advance and you're not reacting to a headline NFP number or ISM number or PCE number, right? CPI, retail sales, woo, scalp. Okay, the volatility is good and is interesting, but is probably the least profitable of your strategies. And if it's the only strategy you have, then we need to work. We need to work on getting you better trade strategies. Okay. Now my phone is buzzing and whacking. Cool. Oh, all right. So what? We're about 90 seconds away. Thank you again to FX Street. Really appreciate you and the opportunity to do this every single month. I love working with our crew here. Non-farm payrolls, 151st month in a row. And I invite you to visit Traders Way, open a demo account, test out our execution speed, test out our spreads. If you want, contact customer service. You'll find it's world class. And of course, on Monday and Tuesday and Wednesday and Thursday and Friday of next week, every weekday, I work with Traders Way clients, planning out their trades for the day and teaching you technical and fundamental analysis, and that's all free for clients. So I encourage you to visit tradersway.com and open up a demo, literally 30 seconds. Okay. Oh, and then for everyone that wants my chart profiles, my chart templates, my indicators. So you get all these profiles, all these templates, okay? All my indicators, okay? Pivot points, moving averages, oscillators, all this kind of stuff. If you want my trading chart setup for MT4, visit charts.fxbootcamp.com. Free download. It's all yours. Take it all. Enjoy. It'll save you hours and hours and hours and hours of searching and setting up and creating all that kind of stuff. Well, thank you, FX Street. I appreciate that. I really do. So namaste, guys. Here we go. Canadian jobs report out faster than the Americans. How's CAD doing? Some CAD weakness here. Here we go. Underemployed. So much is coming out. It's good, right? Someone says, what do we do now? Well, since I've already planned it out for you, if you don't know what to do now, don't do anything. It just tells me you don't have a trade plan or you didn't understand the trade plan we created. So if you don't know what to do now, that's like, put it this way. When you trade, you should know exactly what you're doing. And you should be shocked that you didn't make money. Okay? So if you're in a situation where you're not sure what's going on, you're just don't trade because you're going to lose. Right? You're just going to lose. So thank you for actually bringing that up. Mohammed, thank you for that. If you don't know what the trade plan is, don't take the shot. Okay? So for those who are bears, we are at the price zone we said would probably fall, and we got all these red candles now. So now the follow-up is, are you going to try to trade like a double top? Are you going to try to trade like a small inverse head and shoulders type thing? What kind of pattern would you consider a reversal to be? Would you care to like maybe fib this area? Okay. These are all the questions, but you should be ready to sell if you're a bear. I'm not saying you should sell. Don't get me wrong. I'm saying if you said 15 minutes ago when we came up with the trade plan that you were a bear, you should start thinking about it. And by the way, notice where it bounced. Oops. Let's close this now. Notice where it bounced, it meaning price. Okay, let me move this. Okay. And drag this across. Okay. You see it's how obvious these levels are. That's why earlier I said you need to do support and resistance so you can set up price action. And then you need your pivot points, both of which are leading indicators. So I identified the green or the gray area above us as a place where it should fall. And then I already drew this as a place where it should bounce. Okay. Now bears are looking for something like this now, right? So at what point are you taking the shot? Did you already take the shot? Okay. Okay. So you had a 50% retracement. Was that right, Choose Life? Well, that's going to drop our yield, though. Lady Cash didn't get the template. Never get. Yeah, you did it today, Lady Cash. Or are you talking about before? Sorry, it's the watermarks here. Sorry. Okay. It's just I'm zoomed in, right? Okay. So on the shortest term, you've already had this lower high, lower low scenario take place. Now on a 5-minute chart, you probably still get the same kind of thing. Down, remember this monthly pivot point? We had it like this at once, remember? This is probably what will happen next. Okay, and on a 5-minute chart or even a 15-minute chart, you'll get the next move. It'll be about the same. It shouldn't be radically different. Maybe like a 382 to a 618. Sorry, 1618. Maybe a little small breakout. Okay. Okay. But did you get that? So the first one happened. It dropped, 50% pullback. Now we're off to the next level. And bear in mind, this area up here is what we talked about a half an hour before non-farm payrolls was even released. What was the trade plan, guys? I opened up a 4-hour chart and I looked at resistance, right? We looked for a resistance, and what did we say? 1450. Well, now it's 1420. It's moved 30 pips since we created this trade plan. Okay. Now, bulls. Okay. Bulls, wake up and smell the concrete. Bulls need to get ready. If you were a bull, we have that first kind of little move approaching. Okay. So once again, I'm not saying it's going to go up. What I'm saying is if you're a bull, you need to get ready, because your trade plan before NFP came out was to start looking for a buy around, I think I said 1420 or 1410. Was it 1410? Anyways, somewhere around this gray zone down here, somewhere around this big fat line. Okay? So once again, we don't know if it's going up, but if you are a bull, this is one of your prices in which you can consider to buy. Okay? And the bears were up here, as I marked. Okay? Right on. Very nice, very nice. It's going to be hard to catch a falling knife. This looks like a falling chainsaw. I can blow hole enter NFP die mark sky 9. Same to you, Rhinus. Oh, nice. Actually, I want dollar weakness, to be honest with you. I want dollar weakness on the long run. But the way that the market is reacting is they're like, all right, NFP's still hot. Everything is good. Fed's going to keep raising interest rates. That's going to make the interest rate differential for the dollar even stronger. That's okay, Rhinus. I figured out either you were speaking a different language or your cat was walking on your keyboard. Mariano! What's going on, Mariano? Okay. So here's that bounce. So there was the bear sell. And there was the bullish bounce. Very hard to catch a falling knife, though. Right? Yeah, Chris. So this is why, like we saw earlier, maybe on this 1-minute chart, we can kind of get a I don't know. I don't think you'll get a bottom, but some sort of confirmation, that would be a lot better, wouldn't it? Oh, was that Afrikaans? Anyways. Okay. So to remind those, and especially for those that are just logging in now and they skip the whole hour where we planned our trades in advance, we have two places in which we wanted to sell, 1450 or 1520. Okay. So the first one happened, right? 1450 was our number. And there we are, exactly 1450. Okay. Now, on the bullish side, if you're a bull, our idea was buy it around this number here, which is basically 114-ish. I think it's 114.13. Okay. So plan A was buy around 114.13, but I wanted to leave a little bit of room for the psychological level of 114.000. So that's plan A for bulls. So you got to do this. And, okay, if you're a bull, because these are bears up here. I should get a better drawing tool. Okay. And then the next one is like maybe down here. And I don't think plan C, which is way down here, is going to be a buy today. So we have plan A and plan B for bulls, plan A and plan B for bears. And we're right in the middle right now. And the key to trading is either being a bear or being a bull, but don't be both. How about pound dollar? Well, it shouldn't be radically different, but we'll go look at this. I'm trying to teach you guys how to trade, not necessarily get you into individual trades. So we'll go check out pound dollar later, but I'm trying to let's stick with this for a little bit before we start wandering around, okay? But can you guys now see the value of doing this in advance, where we talked about this area here dropping price and this area here raising price? If you're doing something different, you're probably not profitable, right? Because you're stuck in the middle at best, or worse, you're doing the wrong thing. You're buying up here or you're selling down there, which is just, I mean, there's nothing to it but losing, right? Nothing about making a mistake, like you could sell this one a little bit late up here and maybe you break even or something. That's just how it goes. But when you're trading, some of the bigger decisions that you need to make on these smaller time frames are not entering. It has to do with exiting. So for example, like selling a 1450 was a pretty straightforward trade. We planned it out, nice and easy, lemon squeezy, all that kind of stuff. And we also knew that this was likely to be a buy. That's why we talked about it. I said that's where bears are going to live. We could talk about it very specifically, the exact price. And the question is, if you sold here, which is your second chance, or your first one, which is your aggressive entry, what do you do down here? Do you take profit? And that is not an easy one to do. So Marina says, is that an engulfing candle? Well, on a 5-minute chart, it looks like it could be. But again, the difficulty to this is that, you were supposed to be down here, not necessarily responding to the engulfing candle, or selling up here, not necessarily, responding to NFP, right? So if you felt this was the buy, like I think if you're really going to trade like reversal patterns and stuff, like what is this, a morning star? I forget the name of all these reversal patterns, But at some point, dude, if you said I want to buy around 13 fit or 114.13 if it reverses, you know, at what point do you buy? You know, here, maybe. Okay. All right. This is where, okay, this is where bears are going to try to, okay, right? They're going to try to defend this. So that's where a bear is going to sell. And if you're a bull and you didn't buy the first touch, I don't blame you, by the way. But if your next plan will look something like either, well, like this or more like this. Okay? So based on price action, bears are selling now, or should or could. If this is going to turn, how about this? If it's going to stay bearish, if it's going to turn bearish, if we're heading down to the next low, this is where a bear needs to do it. Okay? And if there are no bears, then so be it. Then whoever sold here is going to break even, right? If you're a bull, you're going to take over. See, it always comes down to sort of the volume, obviously how many buyers there are versus sellers, right? This is why it's important for you to know what team you're on ahead of time. So I'm telling you, like, I want the dollar to weaken. It's not that I want to buy euro. I want dollar to weaken across the board. And I have my reasons for it and all that kind of stuff. So I wanted to go up. And when it was falling, I said, look, I'll be honest with you. I want this to go up. Well, now it's going up. Okay. The benefit of having this, right? Remember how we're talking the difference between news and fundamental analysis? My fundamentals are like a filter. And I end up not seeing the stuff I don't want to see, and I end up highlighting the stuff I want to see. But it helps me make judgments like, even if after non-farm payrolls, euro dollar drops, I still want this to go up. And if I want it to go up, because now I'm so, let's say, maybe if I'm not a bull, maybe I'm just pig-headed, right? But because I'm a bull, I can say, well, therefore, if I buy here, it'll go up. And if that doesn't work, I'll consider this, but it's much less good. Okay? And it helps me get into the trades I want to be in for much bigger reasons than NFP moved. Okay? You see what I mean? I hope you get that message across, because ultimately that's really how you need to trade. If you're a bear, you could have got on that. It's dangerous, of course. If you're a bull, NFP came out, down, 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 that's just your opportunity to buy a dip if you're a bull. And that's what you wanted the whole time. Okay? So Max says, I'm hoping the downtrend will be maintained. Cool. And what channel line are you seeing? Okay? I'm not sure which one you're trading or what time frame, Max, but for those that want this to be bearish, this 1450 area, which we talked about selling, is really the best sell zone. And now we need to kind of get through this area here. So remember, we came down, we touched this black line, right, which was drawn 2 days ago. And now it's starting to rise. So bears, so Max, right? You now need to ask yourself, at what two levels would you like to sell this if you're a bear? Okay. We have one marked already. Let's get rid of this. Well, that was part of the trade plan. You know, what's next? A lower high, so let's do this. Okay. You could sell it there, right, Max? Or you could sell a double top, right? Plan A, plan B. So let's get rid of my bullish plan. Okay, and this is for the bears. And you'll say, well, Wayne, Wayne, why don't you just tell me what to do? You've already lost all your money if that's how you think. Okay. Okay. So, are you a bull or are you a bear? Is he a bull or is he a bear? I'm trying to get this. There's so many I drew here. Well, anyways. If you're a bear, always, always, always identify the next two levels in which you'll consider to sell. Next two levels of resistance. It could be a pivot point, it could be a psych level, but nonetheless, the next two levels of resistance. If you're a bull, the next two levels of support. If you're not a bull, or if you're not a bear, what are you? Right on, Murat. By the way, Murat, visit tradersway.com, open a demo account, take you less than 30 seconds. We can work together every single day, Monday through Friday. I do webinars for clients. Super free, super fun, super awesome, about 90 minutes a day. We can go through all these types of trade plans every single day. You and me and a few others. Okay, so there's Max. Maxie says, right? Maxie's a bear. Right, so if you're not a bull and if you're not a bear, what are you? Raymond says a pig. And what happens to pigs? Right on, Murat. See you on Monday. Online School says, is there any valid point on euro dollar, valid entry point on euro dollar, pound dollar? That's what I've been talking about for the last 45 minutes. Yeah, you're either a bull or a bear, or you're a pig, and pigs get slaughtered. Right, Rob? Okay? So now this is starting to wake up, and now people are like, well, now maybe I should be a bull. No. Bears are getting ready to sell. See, that's the thing. When you haven't picked a team, you're always going to be late. You're never going to touch the ball. I registered for last NFP and still waiting for the response. Not sure what you mean, but anyways. Oh, is it hogs that get slaughtered? Thank you, John. John always corrects me. Thanks, John. Embarrassing me in front of my friends. John's always going to be right. Yeah, thanks, John. My way sounds better than like hogs. You're either a bull or a bear or a hog. Anyways, you're probably right. Pigs get fat and hogs get slaughtered. All right, that's probably correct. and yeah, pigs get elected. That's funny. The hogs get slaughtered. That's pretty funny too. All right. So I hope you got that point. But if you're a bull, identify the next two levels of support. If you're a bear, identify the next two levels of resistance and get ready to buy or sell based on, right? Is that right? Yeah, mine's just drawn. Yeah. Alrighty. Let's take a look and see if anything's happened in other parts of the world. Okay. Look at Kitty Cat. Okay. You notice where we are? Aye. Don't turn your back on me. Okay. Is this a good place to buy? No. Is it possibly a place to sell if you happen to be a bear? All for show. Gary, you might have you can filter what type of news is available, and maybe you have everything filtered off. like categories and stuff. Maybe you have none of these checked. Okay. Oh, what time frame is this? Yeah, this doesn't have the watermark. Sorry about that. This is a 15-minute chart. Okay. This area I created as a sell zone 2 weeks ago. It was frustrating because I got what I wanted, then it completely collapsed, right? And then boom again. But for those who are new to trading, my trade plan on this, my trade plan doesn't mean it's working, but my trade plan is based on this X. And this X tells me that I'm going to sell USD CAD, and I'm going to sell it down to, I can't see that, it was at 137.50. So let's say 138, okay? Minimum 138, maybe 137. Looks like, yeah, let's say 137. No, 127. That must be one. I can't see. What is that? Sell 131. We're at 131, 128. Yeah, okay, so it must be 127. All right, so it tells me on Monday, not actually this was on Wednesday. On Wednesday, the plan was sell at 131.50, and the target was 127. So 450 pip move. Okay. And so if that's going to survive, then we're approaching a new sell zone. Okay. So I'm going to look at it this way. You can see I already have it planned. Okay, this was plan B if I went higher. Plan A was sell around 131. You can see I already had it there. I just moved it to incorporate this, but I already had this here. I already had a sell plan at 131 when we were down here at 130.50. The trade plan yesterday was let it rise back up in here. If not NFP, then, on Monday, take a shot to the sell side. Okay? And there's the plan there. Okay? And then it'll head down to there, which is obvious support. I know bulls live there. And then it would come up, and then it would go back down. So I have this. So yesterday, actually on Wednesday, the plan was go from here to here, right? Wednesday. On Thursday, it was let it retrace back to 131 to sell it down into here, in which I will take profit, in which it will rise, in which we will then resell, and then head down here, and eventually head down to here. That sounds like a lot of trade planning, doesn't it? Well, that's where I want to get you guys. That's how I want you to see your trading. And what happens if I'm wrong? If it goes above this gray area here? First of all, get out. And second of all, wait and see if there's a double top to sell that. Okay? If my fundamentals are correct, right, then my trade plan should stay firm. I should be a seller in this market. Now, what is going on here? Well, as I mentioned earlier, I would like to be a bear on the US dollar. And I have fundamental reasons why, and I certainly could write a 2-page paper on why. But I can do it, and that's my opinion. So just based on US dollar, I want this to go down. Now we have to isolate the Canadian dollar and say, well, is Canadian dollar worth buying? In which case, you're selling USD CAD, which means you're selling USD to buy CAD. So why would I want to buy CAD? And that's why I want oil to go up. You see that? Now, I understand oil is down based on supply side analysis. It makes sense. On demand side analysis, demand is pretty okay. Demand is good. It could be better, but low oil prices seem to be a supply side issue. And maybe that changes soon. And typically when oil prices are going up, the Canadian dollar is benefiting. So if I can only get oil to go up, then this trade plan is going to work. And if oil does go up, if oil falls further, I'm either going to bust out a break even on a lot of these trades or take small losses, but that's a normal part of trading. Having a solid fundamental and technical trade plan, and if that still doesn't save you from losses, at least your losses are small. But you're certainly not winging it. Okay? I think I'll open it up to questions. Or currency pairs. If you want me to analyze a particular currency pair, I'd be happy to take a look at it. Let me know how I can help. Just type it in the chat. Actually, Jimbo, I can't adjust pivot point lines. These are suggested trade plans, right? And often I move them because I'm saying if you're a bull, you want to buy down in here, and then I'm trying to change, make it clear so if you're a bear that you're selling up there. But just relax, Jimbo. Okay, but I don't change like an M2 is an M2 and it means something. An M3 is an M3 and it means something. And I can't adjust pivot points. Okay, I'm just trying to teach people, if you're a bull, how you'd set up bullish trades, and if you were a bear, how to set up bearish trades. Okay. Okay. Yeah, well, I'm trying to show you different points of view for the trade plans. Okay. Yeah. Yeah. It's the process, Arturo. Exactly right. Okay, so let's go with pound, Aussie, USD yen, Turkish lira, pound Swissy. You know what? Let's just start with pound Swissy. Okay. Where would I have pound Swissy? I think I have it on scan pound. Okay. So the monthly swing trade is from here. Okay. If you're a bull, the monthly swing trade, which we knew several days before. I have a swing trading group, so we meet before the month begins to set these things up. I think we met on the Friday way over here. The monthly trade plan, if you're a bull on pound Swissy. Now, the Swissy's been weak for quite some time, and the Swiss want the Swissy to be weak. It just comes down to whether you want to buy the pound or not, right? And the trade plan is from here to here. Okay. So the projected top for the month should be around 132, and we're currently at 130. All right. What do you think? If you had, let's clear all this out. If you had that, how do you say it? If you had that thought 2 weeks ago, right? So here it is last Friday. Okay. You were here. Okay. And on this Friday, you looked and you did analysis and you said, well, I really would like pound Swissy to go up. I really understand that the Swiss National Bank, SNB, wants a weak Swiss franc. Okay? If you want that, you're like, I want pound Swissy to go up. Now that's the big decision, and that is the moneymaker. Everything else is nonsense after that. But let's say in this period you say, you know what? It's been a reasonable amount of retracement, right? You're calling this, maybe you're fibbing it like this. You're like, it's about a 50% retracement. We're at all resistance, okay? So now you zoom in that time period and you say, you know what? I think we're about ready. I'm a bull and I want this to go up. So you start to analyze. And by the way, we analyze this as a swing trading group. We analyze this and said, well, if you were a bull, somewhere between that moment and the first of the month, you would want to be long around this price. And I can't even read that. What is that? 128? Okay. That's it. Somewhere around that price. If you went through that thought process, guys, would you be able to catch that move? Where you were thinking about it for 4 trading days, so six days in advance? Okay. Raymond, when you enter your stop at like that M2, you would have it just below the S1. Okay? Okay. Yeah, Beatrice, you can go to charts.fxbootcamp.com. You can download everything there. Guys, let me ask again. If you were thinking 4 days in advance, you knew you wanted to buy around that particular price, this was your buy zone, would you have the ability to catch it? Would you wait for 2 or 3 or 4 days and catch that move? That's what a trade plan is. Okay. No, Joe, if you're using a pivot points for a swing trade, if you buy at M2, your stop is below S1. If you sell at M3, your stop is above R1. Okay? And 50 pips is probably enough, but it has to do with the market conditions that they're setting how many pips. So if you find that it's 75 pips instead of 50, because last week was a massive week, you might want to cut your lot size in half. Okay? Right. So, yeah, good, guys. Good. I want you to live and die by your trade plans, not by the volatility in the market. Okay? If you want to be a professional fund manager or a bank trader or trade other people's money in some fashion, you got to get yourself out of the short-term volatility, because you can get really unlucky in volatility. You could be a bull in a rising market and lose money on volatility. What we want to get you to is you're a bull in a rising market and you're buying retracements at support and you're letting your winners run and you're cutting your losses small. And we all know that is much, much, much more difficult than it sounds. But if you actually do the math, to reverse engineer this, do the math, bust out a spreadsheet if you have the capabilities of doing such, and just start planning out if you were to scalp. You're a pure scalper. That's all you do is scalp. 8 pips there, 3 pips there, 12 pips, all this kind of stuff, over and over and over again. How do you end up making a lot of money? I think if you do honest analysis, you'll find that you'll never make a lot of money. You'll never become wealthy. For example, you can't become wealthy if you keep getting out of your trades and taking small wins. Wealth means your money is growing for you. You might be rich, but you have to work every day, one trade after another trade after another trade, versus making an entry here and going to bed, waking up 12 hours, and you're like, oh, I made 100 pips. And then a day goes by and you don't do anything, and you're like, oh, I made another 100 pips, but I didn't do anything. My money made money, right? But you're also doing stuff beyond where you are looking at central banking issues. You're looking at business cycles. You're looking at trade issues. And that, we make money when money crosses a border, either going into an economy to demand a product or a service, or vice versa. Americans buying TVs from South Korea, right? That is what changes the value of money. That's why I want a weak US dollar, for example, because it tells me if people are buying LG TVs and Samsung TVs, that it's not likely their marginal propensity to consume has changed, because those are pretty static. So what happens is more like people have a decent job and they believe they will have a decent job in the future, or even a better job, right? And their household confidence and household wealth has increased with a constant marginal propensity to consume. Tells me that if Americans feel comfortable in their household wealth, because let's say the value of their house has gone up, or that the quality of their job has gone up, or they expect it to go up, or they're finally making decent money, then they're going to go out and spend. And if we're going out and buying Samsung TVs and LG TVs, and now Samsung and LG dishwashers and washing machines and refrigerators, they're out spending this money, then that means the US dollar weakens. Because they're not buying GE profile appliances anymore. GE sold that. So they're out there buying Samsung now, and that means the US dollar weakens. And that's a good thing if household wealth is going up, household income is going up, and consumer confidence is going up. Then that's a good thing to see a weak dollar. See what I mean? So as CMFX Performance says, yeah, both technical and fundamentals, you blend them. And absolutely. And I start with the bigger questions. Now, the bigger questions don't necessarily put me into a trade today, but it shapes how I do my analysis. Okay? And from there, then you drop into a long-term chart. What is the trend now? Where are we going? So one of the things I ask a lot when I do webinars, okay, I ask a lot questions like this. I say, all right, where is the pound dollar going for the rest of the month? Now, the way that you answer that has to do with whether you're a bull or a bear. If you don't have an opinion, well, you've already lost. You just stop trading. Do yourself a favor. Just stop trading. Okay? And then figure out. And I'll tell you why. If you're a bull, bulls bought this earlier in the week. Very similar to that other, pound Swissy, right? If you're a bull, this line right here is the best place to buy, And we knew that before it was even printed. We knew this last week, and then earlier this week, and then it came down here, and then finally did the big move, right? So you could kind of draw it more like this. Okay, and then it took off, right? Okay, and this being the line you wanted to buy. Okay, so bulls definitely bought that. Okay, and then you can see we actually had this planned out 3 weeks ago, guys. 3 weeks ago we had this plan. Oh, right, Jimbo? Cool. So with that being said, you could have bought it down there. Double bottom, we talked about it weeks in advance, and a monthly M2. That's as clear as it gets. Okay? So, and maybe it was a short squeeze, but we don't know, Jimbo. We don't know yet, but the thing is you still have to put together the trade plan. Okay? Now, if you are a bear, so this was a short squeeze, according to Jimbo, or let's say he thought it was a short squeeze, and it still could be, right? So that means whoever got squeezed out of the shorts, they're going to sell again, right, Jimbo? This is the actual line, or the actual price a bear should start selling. It is 130. So if you're a bear, hello, wake up, create a trade plan. Are you trading this double top? Like, what's your plan, dude? What's your plan? What are you doing? What's your plan? What about the lower low, lower high, lower low? Like, this is a sell zone. This is a massive sell zone. Okay? And whoever bought down here should either take profit or move their stop. Right? So those are both set in stone trade plans based on whether you're a bull or a bear. I don't know if you're a bull or a bear, nor do I care if you're a bull or a bear. All I care about is that you have a trade plan. Okay? Look at all these. Okay? If I were a bull, I would even understand that there are bears here. And that's why I would consider moving my stop. But as a bull now, I'm going to probably buy a dip and I'm going to take it higher. Okay? And the reason for this is, remember how I started this? With the question, where are we going? Bulls believe we're going up here, 133. Okay? That's what they believe, and that's what they intend on doing. If they don't get knocked out, they're going to keep buying until they get somewhere between 133 and 134. Okay? Bears are thinking, what is this, 125? 124.44? So 124. Bears are thinking 124. Okay? They're thinking 600 pips down. Which one's right? Couldn't tell you. I have no idea. Nor do you. All you can tell me is, are you a bull or are you a bear? And once you answer that, the rest is so much easier, because now you know if you're a bear, you could sell a double top and then let it drop and then sell a lower high and then let it drop, then sell a lower high and then let it drop, and then sell a lower high, or you know which pivots you want to sell, M3, central pivot, right? All this kind of stuff. If you're a bull, you're going to let it drop and you're going to buy it, higher high, higher low, buy it, higher high, higher low, buy it up until here, and then you're going to take profit. It becomes exponentially easier, not easier, but easier to make decisions, because you're filtering out so much of the noise of, oh my God, look at that giant candle. Maybe that means I should buy it now. If that's how you trade, you've already lost all your money. And professionals don't trade that way. There's just no way a real professional trader is like, oh my God, look at that big green candle. Now I need to buy it. And, and worse, they're probably buying it up here, right? You're like, there's just no way that happens. Okay? So if you're a bear and you're sitting around waiting, you're salivating right now. This is so attractive to you. You're like dizzy. You've been waiting all week for this. You were hoping, please, non-farm payrolls, take this way up there so I can sell it. You see the logic there? You're begging as a bear for this to go higher, because you know you're supposed to sell high. And you also know how to do technical analysis, and you also know how to swing trade, and you also know pivot points, so you know all of that is there. That's what you want. You're ready for that. Anything above that, you're not so sure. Okay? And that's where you got to get, guys, where you set up your trades even a day, two, a week ahead, and then be ready. Set up the ambush, wait up there, and then trade the double top at resistance or the double bottom at support. Look at the double bottom. You missed that double bottom? How could you miss that double bottom? Oh, you didn't even see the double bottom. You're like, Wayne, I don't use a 4-hour chart. Oh, well, maybe therein lies your problem. See, if you were here, you never saw the double bottom, did you? All you saw was lower low, lower high, 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 right? And you didn't even see this coming. Never saw it coming. You had no idea that that was going to be a double bottom. Well, therein lies your problem. And now that we've uncovered that, I invite you to try to fix it. Okay. So I hope that was helpful, guys. I don't mean to make it sound like I'm talking down at you. I'm trying to be clear. Yeah, well, you got to be ready, right, Adam? You got to be there when it's happening. And that's the tricky part, yeah. Yeah, I know you're not a full-time trader, but if you were a full-time trader, Adam, your job is to be there and be ready. Okay? And maybe for you, Adam, maybe you do need to enter with working orders and, and try it that way. So anyways, I was really hoping oil would be moving. Okay. Same thing, still there, same price. Look at the power though, guys. Amazing. Just wonderful. All right, so where should we go? Let's do some gold. So I've been waiting for like this dollar weakness, and right? So with dollar weakness, typically you get some gold strength, but we've been in this kind of, this kind of situation of down, bottom out, and then just kind of get stuck sideways here. Okay. So I'm hoping that we can see a step up. Okay. So for example, next week, if I was a bull on this, I would like to buy here. What is that? 112.22. That means we need to update, and this has to come down now. Okay. And maybe even more significantly, the entry was really the first day of the month. You see this? And that's predicting an R2. This might just take off and then come back. I'd like it to come back now or next week, but it may not even do that. The central is predicting R2, and that tells me $1,272 is the projected high for the month of November. Okay. That's all it tells me. Other than that, it's pretty mediocre. Yeah, where did I put the peso trade? I don't see it here. Did I have it planned here? So we were talking about this, I guess, on Monday. When was it? Monday? Tuesday, maybe? I guess it was Tuesday. The plan for the early part of November was to sell this pair, in particular on the first day of the month, which is here. Now, the plan at the time, this is where we were when I did the plan. So I'm like, if this were the top, then drop lower high, lower low, maybe. In this case, it made the higher high, but notice the move, right? So this is not a perfect trade plan at all. The only part that's perfect is that we discussed that on this day, $2.6 billion would be traded. Okay, 2.6 billion. That's all we knew. So somewhere around that point, we expected this to move down. It's simply front running a $2.6 billion trade. Is it inside information? No, but you trade it in such a way. So who got it? John got it? And Ron got it? Who else got the, looks like Jimbo might have got it. Reb might have got it. Okay. Now that is a fundamental trade. If you don't know how to trade that, if you go to YouTube, I believe it's on the Trader's Way channel. If you type in how to trade the Mexican peso and why it works, Wayne McDonell, you will get about a 20-minute video. So Corey and Steven, 2.7, right on. Roger caught it too, right on. So that's another free video. It looks like Jimbo got it too. Adam got stopped out. Yeah, well, this move is very unfortunate, right? The day before, but anyways. And how many people have downloaded the charts, my chart templates, and my MT4 setup? How many people have downloaded that from charts.fxbootcamp.com? I want to make sure it's working. I know about 5 or 6 people said it worked. Okay. Ravinder, you're probably talking about the pivot points, and that's what I want to confirm now. How many people have downloaded the free templates from charts.fxbootcamp.com? Yeah, sure. I just did. Charts.fxbootcamp.com. Okay. Mango, sorry to say that you didn't get it. No email. Well, then there's nothing else I can do. Alex Bailey. Charts.fxbootcamp.com. Okay. Even today, John. Today is a whole different system, John. I'm not talking about yesterday. Okay? I'm talking about today. Yeah. So the old system, 75% of people got the email with the download link. Why the other 25? I can't figure it out. So this is a completely different system. If you still don't get it, I don't think there's anything else I can do. You know, it's going through a SendGrid system. You know, the other one went through a third party, well, it went through MailChimp. So MailChimp can deliver, but if you didn't get it, so I switched it off. Now it's going through SendGrid, which, I mean, this is their job. They have billions of dollars invested into just making sure you get emails, right? So if you don't get this, then I don't know what else I can do. But okay, so I'm sorry, Mango. I don't know. It ain't me. If there's two different systems, both of which are trustworthy, and you still don't get them, it's on your end, brother. I'm sorry for that. All right, so let's move on. Let's go to yen-yens. Adam says, okay, it worked. Woohoo! Joy to the world, all the boys and girls. Done, amazing. Say, that's what I like. Joy to the fishes in the deep blue sea. Joy to you and me. Boom, 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 boom. Nice. All right, so let's go to the yens. We'll start with Euro yen. Okay. This is a case of the other yens went before it, so it's being dragged up, kicking and screaming. Adam says, sweet. Say. Yeah. Well, Mango, it's really weird that you don't get it and you're promoting something else. So hopefully there isn't a conflict of interest there. But, you know, that's cool. I mean, it's really unfortunate you don't get the email. Anyways, up, down, up, down, up. So this kind of gets back into this. This is plan B. We never needed plan B, but plan B was to buy the dip there. Bears were supposed to sell up here, which you can see they actually did sell up there. So Jimbo, when I'm deleting these, it's because there's no longer a point to having them there. But if you were a bear and you sold here and it came down, or you sold here and then you sold here and it came down, it's still a valid trade plan to sell here. That's a good trade. And you can see for 16 hours it fell. Right? So that's a good trade. The reason I deleted is because, you know, I had it where if it breaks up and pulls back, this is a buy, or if you're a bull, this was a buy. Okay? And if you're a bear, this was the only sell. But we can see bears sold and they were right for 16 hours. And then the bears sold and were right. And then the bulls took over, which is fine. So I'm just deleting this to get it out of the way to make it less confusing. Okay? But both are valid trade plans. The sell here is actually what the bulls wanted. And a sell here is where bears should sell. They should. It's a role reversal. What I don't know and what you don't know is how many bulls and how many bears. That's why you need to know whether you're a bull or a bear. But if I was a bear, I would have sold there every time. And I would have lost money. It doesn't make it a bad trade. Yeah, I got you, Mango. Marina says it worked. See, right? Emmanuel says, I don't know what to do after downloading the template. Did you watch the video that explains how to install it? It's that giant video in the middle of the page right above the download button. That is going to be wink, wink, nudge, nudge. That could be a hint, wink, wink, nudge, nudge. Maybe that will tell you what to do. Good. Right on, John. Woo! I'm so happy. Emmanuel, watch the video. It tells you how to install everything. It goes one by one by one by one, step by step, how to install your indicators and such. Okay? John says, I don't know what you did. Oh, we reprogrammed it from scratch. Yeah. Corey says it was in Spanish. Yeah, I can't do anything about that. Yeah. All right. But anyways, thank you guys for your patience. Thank you. And I've been through a hard week. You know, I've had a lot of schoolwork, and then I was at Harvard at the debate thing, and doing this and doing that. And yeah, that's the other way to do it, Shug, is you're just going to have to do it on your own manually. All right. So anyways, there's that. There's Euro. Not the world's greatest opportunity. Okay. But let's go to like Aussie, for example. You see? I already have it. You see the double bottom? How do you trade a double bottom, guys? What's the best, easiest, safest way to trade a double bottom? Does anybody know the secret word? Does anybody know the secret word for the safe way to trade a double bottom? Thank you, Lennon. Hammock! Yeah, there's a secret word. Blow your wages. Like, how do you trade a double bottom? Buy it! Well, no. The reason I say no is if you buy a double bottom, you're betting that it'll hold. And you're basically saying, I'll bet you anything. Well, I'll bet you whatever. I'll bet you this money that the double bottom's going to hold. That's not really how you do it. Okay? A double bottom is confirmed by that. Okay? But I taught this thing years and years and years and years and years and years and years ago. Okay? Where I said you need to practice one thing over and over and over again. And I actually advised someone that I mentored to do this one thing 100 times in a row. And then measure each time how well they were doing. And of course, along the way, you'd get better and better, especially if you're measuring, right? Just out of the Hawthorne effect, you'd get better. So anyways, this idea that you would drill and 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 drill until you could do this in your sleep. And the analogy I gave is joining the Navy, and you're on a battleship, right? And you're sleeping in your hammock, and all of a sudden in the middle of the night, and you wake up, you're like, what the hell is that? Drills, it's drills, right? And all of a sudden over the speakers, battle stations, battle stations. You're like, oh, battle station. So you get out of your hammock and you're half asleep. And what's going on? You're putting your boots on and you're right. And you go out. Which way do I go? Oh, down the hallway. And you have to duck to put your head under the big steel round door. And then you got to go up the ladder and you get to your gun and boo, 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 boo. And you're ready to shoot. And then the captain like, this is just a drill. This is just a drill. And you're like, oh my God, this captain's driving me nuts. So you go back to bed, right? And 3 hours later, you're like, oh, what? Battle stations, battle stations. You're like, jump out here. My boots. And you run down the hall, duck your head under the door and up the ladder and into your battle. And you're ready on your gun. This is just a drill. And this goes on day and night for weeks and weeks and weeks and weeks. And you get to the point where it's the middle of the night and you hear this battle stations. And you just fall out of bed and your eyes are not even open. Your boots go on automatically. You walk down the hall and you duck your head under the door, but your eyes are still closed. You didn't even wake up. And you just kind of go up the ladder. You're like, I got this. All right, it's just a drill. This is just a drill. Go back to bed. And you're like, and you can do it in your sleep. Hammock. Okay? And by the way, this is anchoring. It's part of neuro-linguistic programming. So if you can think of anchoring, if you can think of sleeping in your hammock and jumping out, if you can think of the sound or ducking your head under the door or climbing the ladder, if that's what you think of when you get to a double bottom, then I've found a way visually and mentally, even the thought of the pain of knocking your head on top of the steel door. Oh my God, that would hurt. But can you use that pain to anchor the memory of how to trade a double bottom? And that's what I want you to do, is get so routine that you remember. So listen to me. This is the way to safely trade a double bottom. The first part is to identify the potential double bottom. That is number one. Okay? So maybe we can do it this way. Where did my thing go? Which one were we doing it on? Where? Aussie, wasn't it? Yeah, Aussie. Didn't save for that one to be small. I wanted that one to be small. Jeez. All right, forget it. Okay, so anyways, first one, double bottom. Pretty obvious. So that's the battle station cry, right? The next thing is the higher high. Now, you can identify this in different ways depending on the time frame you're. All right, it looks like I'm back. All right, so to continue. Okay, there's the old support after. So you got to break through that. That's number two. Okay. Number two is the higher high. So I wanted to enter this with text this way, right? First one is going to be the actual double bottom. Let's do it like this. Number one, double bottom. Okay. Two is going to be number two is going to be higher high. Okay. So you can see how we busted through this was support, this was support. Okay. That's where bears are supposed to sell. Well, we didn't get it. We clearly got above. Okay. So let's move that there. And number three, lower, no, higher low. Okay, and that's where you buy, is this dip right there. That's the buy. Okay, this is your buy zone right there. The double bottom, higher high, higher low, 1, 2, 3, buy. And the target on this Aussie yen, after that trade, the bullish target is still way up there, between 83 and maybe even higher, 84. Either 83 or 84. Okay? Good job, sniper. That's how you do it. So can you guys can you anchor that in your brain? How to trade a double bottom? What is the secret word? Hammock. One really good way of doing this is explaining the hammock to your spouse, to your kid, to your dog, to your neighbor, to your buddy. Just say, I learned a really interesting thing about neuro-linguistic programming and anchoring. Tell the story about the battle stations. It's just another way of anchoring it. Is that right, Sniper? Very cool. Lennon, Wayne, how did you get the take profit again? It's an extension of pivot points. It's the monthly pivot point. Okay. So on top of this, this is a front run monthly swing. So that's a whole different story now. But this is a front run monthly swing that tells me buying this dip at 79.20, 79.25. The target based on that trade is 84. So I would expect, if I traded that double bottom, I would expect 500 pips or I'd be disappointed. Okay, Leonard? And so it's not just a double bottom with a 1, 2, 3, but it also is a front run monthly swing for November. So if you only got 400 pips, you'd be all right. You're being conservative, but you expect 500 of this. Otherwise, you're reasonably disappointed. Oh, you mean the 1, 2, 3? I can't go through that again. It took me 20 minutes. Sorry, bro. Okay, so how about I'll open it up for questions again. Yeah, rewind the live stream. Maybe that'll do it. All right. Yeah, and then forward back to real time. Too bad we can't do that in real life, huh? How can I help, guys? Was that right, Shook? Well, maybe it's got to go through 9 servers to get to you, meaning maybe your ISP or something like that. Maybe your government reads all your emails or something. Beast, I looked briefly at Beast, but we can definitely do that. Oh, no, we did Beast. Yeah, we did Beast. Okay. Yeah, we did this. Right back to the range, huh? Okay. You are not alone. Well, I'll wait. You let me know what's on your mind, guys. Loom. A loom, a loom. Look at that. Nice, huh? Nice. So what are you going to do if you were a bear on this and you wanted this to come down? Well, for it to go down, you need it to come up. Oops, didn't mean to do that one. Okay. Or if that doesn't work, let's get rid of that. If that doesn't work, you can let it make the low. Gee whiz, come on. Let's do it this way, I guess. You can trade it like that. So we don't know what's going to happen, but you have contingency plans for everything. So if it rises now, you'll sell it almost like a head and shoulders, or if it makes a lower low, then you'll sell the lower high. Either way, you're a seller if you're a bear, right? And that's predetermined by your trade plan up here. So if you're trading the monthly M3, then yeah, you need to be doing bearish trade plans here. Marina, you don't sell Euro Aussie. When did you start trading Euro Aussie? I don't believe it. Trey Leon Bay, why don't you take a look at global dairy prices? Go to the Fonterra dairy auction website. Maybe check that out. That's where I'd go first. Dave wants to know if I scale in and scale out. I typically don't. I often say scaling is for fishermen. Okay, Marino wants, what was it? Euro Aussie. You bet. I don't think I'd have it up here, but I thought, oh, I do. Yeah, I was going to say, Marina, what are you talking about? How's that look? So we have the up, the down, the up, the down, the up, the down, the up, maybe a bit of down. So let's clear this out. Let's get all freshy. Put it on a 4-hour chart. Okay. This is a role reversal. Okay. And it sets up the counter trend trade. So I only have two rules, two opportunities I consider for counter trend trading. That's one of them. So at some point in the next 4 weeks, I would anticipate, if I were me, a move back to the central. Now that's just following pivot point theory. It's not my opinion. That's just what pivot points tell me. I think if I were going to resell it, I'd resell it actually before that. Okay. But the general pivot point theory. So I'd rather, if I were me, I would probably look to sell here. But the rule in the rule book says if that happens, then we come back here. Okay. And not that we hit the price, because if we hit it on the last day of the month, then that's irrelevant, or let's say expected. In this case, it's too early. In the first few days, you're hitting that target. So I would look for a counter trend, or I would get out, stop trading it. Okay. Okay. Yeah, well, this is get out. If you're a bear, this is out. You're done. Walk away. Okay. That's what it says to me. You're exposing yourself to counter trend. Did I have my new trading rig set up last non-farm payrolls? Remember how it used to be 18 screens? You guys like that one better? So now it's only 7 screens. No, people can't be mad at me. People used to get so angry. Why does he have 18 screens? Well, he must be a horrible trader. He has 18 screens. I'm like, really? So now there's only 7. Steven says, I don't trade euro. No, typically not. I'm not saying you can't. It's just me. No, I typically trade other things. Cool. La 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 la. Yeah, I'm just bummed out about oil is the biggest thing for me. See you, Jimbo. Have a wonderful weekend. What do you guys want to do with our last half hour? Yeah. Yeah, Aussie would either benefit or be hurt by such rhetoric. There's no doubt. What are the basic rules for spot trades? Well, I suppose you could take this down. Like I plan my spot trades first by planning my monthly trade. And then I plan my weekly trade. And then from that, I plan my day trade. Okay. So that's sort of the basis. So you can see, like, here's a Friday trade, here's a Monday trade, right? And here's one. So I fold them all in. If I want this to go up, that's the biggest thing. If I analyze Aussie yen is going up, okay, and I very, 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 very clearly did. Even when we're up here, right, we were planning for this to go up. So once we get into this situation, I'm all up, right? So even on a day trade on a 15-minute chart, right, I'm buying dips. So let's see if I can even get this into a week. Okay, so all right. So what if I told you the only thing you're allowed to do is buy? Could you trade this? Okay, up, 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 right? Buy. Up, 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 buy. Okay, up, 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 up. Haven't even had an opportunity. Give it a little click in. Up, 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 up. There's a buy. Okay. And that's all I would have been doing. And each one is basically a day trade. Those are just day trades. Okay. But notice without the strategy, the tactics get difficult because you have just as many bear setups as bull setups. So you have to have strategy. And the rest then it gets pretty easy, as you can see. right? Oh, there's the old resistance. It should become support. 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 There's the old resistance. It should become, right? That's it. And I filter everything else out. It's all noise. And then people say you got so many moving averages. And, all right, get rid of them. If they're not helpful to you, get rid of them. You don't like this one, get rid of it. You don't like that, get rid of it. Oops. Okay. Is that too simplified? Maria? Oh, Maria says, who asked the basic rule for spot trades? Okay, Jim? And then Maria says, explain a reversal pattern. Okay, let's do that. Up, 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 up. Down, down. It's a higher low and you buy. Up, 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 up. Down, down. It's a higher low, you buy. Up, 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 up. A little bit of a down, down. Up, 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 up. Okay. What if this happened? Oops. Well, it ruins our trend. Okay? It ruins our trend. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, 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 down. So the first part of this is where reversals are born. Okay? Now, a reversal pattern starts with a lower low and an uptrend. So the two basic reversal patterns, I think someone explained. Yeah, reversal patterns is either a double top, in particular after this lower low, right? Or a lower high. Okay? In which the new trend should start, which, oops. So this new lower, right? Lower low does not belong in an uptrend. Lower high, right? So this is down, 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 up, up, sell. Down, 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 down. What should happen next? Up, up, sell. Okay? And that goes on and continues until a higher high. Okay? So it could look like this as well. Let's treat it like a double top. Okay. That's all it is. It's the break of the trend is really all you need to do, or all you need to think of when you look at reversal patterns. But can you see how there's still an up available here? Okay. This area here is still buyable. Okay. But what would a bear do now? Okay. A bear is going to treat this like a hammock. Double top, lower low, that's 2. Lower high is 3, and that's a sell. You say, well, Wayne, which one is it? Well, that's the problem. I don't know. That's what a bear would do. And a bull would buy it low down here. Okay? No, it does not. Max says, how can we be definitely sure that it will reverse? Well, you never can. So that's why it really helps to be a bull or a bear before you even look at a chart, and then have really good prices. And then lastly, you don't want to get into a habit of predicting reversals. I want you to get in the habit of buying trends. Okay? So if you could just cut out reversal patterns completely out of your trading memory, right? I think we had this area marked with a channel. You see, like the break. We had it something like this. Break of the channel, down, buy, up, buy, up, buy, up, buy. So I'd rather you, because this currently looks like it's still maybe up, I'd rather you sit and wait and buy the dip than sell the rally. Because currently it's not you can sell the rally in a downtrend, and I don't think you would call this a downtrend. Fibonacci retracements. You know what? I'd rather you focus on price action than Fibonacci retracements. They're the same thing. Generally, they're the same thing. Okay? See how this used to be the resistance? So I'd rather you just buy the dip. That's just price action. Now you could also have a fib and say, oh, Fibonacci. Oops. Hello. There we go. You could also have a Fibonacci and say, oh, the 50% predicts the 1382. Okay. But I don't want to confuse you at this point. I don't think it's necessary. So, for example, if you go to FX Bootcamp, there's a bundle there. I believe it's the basic training program and the price action course. Is that right? I think so. That would be a good place for you to start. Don't worry about Fibonacci. Don't worry about it. I mean, it's useful, but you can get that 5 different other ways as well. Don't make a big thing about Fibonacci. Price action, and then later on pivot points are what you need. Was that a pointy bottom? Sultan says, how would you counter trend the Kiwi trade? So which Kiwi was it? Now, I remember we looked at Marinas, right? Which was, what was it? Euro, Aussie or something? Which Kiwi are you looking at? Yeah, Max says, indeed, predicting reversals hurts like hell. Yeah, I'd rather you, what did I say right from the beginning? Hello, my name is Wayne McDonell. I'm a currency trader, and I like to trend trade, right? So that's going to be predominantly what I teach you. Okay, Kiwi dollar. So let's take a look at Sultan's Kiwi dollar. How long have you been Sultan? All right. Yeah, you're right. This opens you up to a potential counter trend trade. So you can drop into a 5-minute chart or a 15-minute chart and hammock this thing. Yeah, I wanted to be Sultan once, but I just couldn't get the votes. Okay. Okay. So that I would look for something similar to this. Okay. John, I think, John, you have a t-shirt that says that, right? I could just see the tiny shirt hanging out at the beach. Trading reversals can drive you crazy. Ask me how I know. Okay, Sultan, any follow-on questions? Yeah, Maria wants to know how pivot points are calculated. First of all, I do invite you to fxbootcamp.com. We have many courses, particularly the swing trading course, but I think there are many other courses as well that explain pivot points. Like the basic training program will definitely go into that. So maybe you should consider that beginner trader package. But anyways, pivot points started by futures traders that were trading in the pits, in particular at the Chicago Board of Trade. And I went to the Chicago Board of Trade and I was on the trading floor and I did talk to traders and I did ask them about the order cards and they're like, yeah. But anyways, they used to get these order cards. So if you were a floor trader, okay, is there a cost? Of course there's a cost, but it's not a lot of money. I can't even remember what it is. But yeah, there will be an exchange of money for service. Yes. Anyways, on the floor, these floor traders, they get orders from upstairs, right? And these orders now, they have all their brokers and all their other clients and stuff. And there's one client says, I want you to buy wheat at $12. Another guy says, I want you to buy wheat at $12.05. And other guys, I want you to buy wheat at $11.35, and I want you to sell wheat at $13, and I want you to sell wheat. And so there's, let's say, hundreds, if not thousands, of clients at one firm. And this one firm has a few traders down in the trading pit. So when you get to work in the morning, the market hasn't opened yet. You get to your desk and you look at your order sheet for the day. Oh, all these clients want to sell. All these clients want to buy. Great. So now you're like, well, what's a good place to buy? What's a good price to sell, right? So they would do some basic calculations. They turn the order card over and they do some basic calculations. What happened in the last trading period? So like if we're talking about weekly pivot points, we'll say, okay, well, I want to put my buy orders in low and I want to put my sell orders in high. So what does that mean? Let's quantify this. So we say, well, what is the market doing right now? So you look at last week's high, and you get that price, right? Last week's high. Great. The high price was there. Last week's low was down here. Great. And where did last week close? Now, this is important because it's a weighted average, and it's incorporating sentiment into your numbers. It's not, the high and low divided by 2 because that would get you the middle. We're not interested in the middle. We're interested in sort of the sentiment. So if last week started bullish but ended bearish, we need to pay attention to the fact that the week ended bearishly. So you look at the high, the low, and the close, and you divide it by 3. And you come up with the central pivot. And then you do some other calculations, and you come up with S1, S2, S3, R1, R2, R3, and those are levels of support and levels of resistance. Very simple, basic calculations. But now, the floor trader could say, all right, if we get down to these prices, I know I can flip over and say, I can start entering my buy orders. And if we get high, like let's say after lunch prices go up, he can flip his card and say, oh, these are the prices I want to start entering my sell orders. Okay? That's how they started. Okay? Okay? That's how it started. And these floor traders work their way into Forex. And so I have a picture of standing next to the S&P 500 trading pit. And it's one of these moments you'll never forget, actually. I walk onto the floor of the Chicago Board of Trade, and the first thing you walk into is soybean meal futures. And I walk right in, I'm like, oh my gosh, this room is huge, and there's lights going on. It's sort of like your first time in Las Vegas. It's like it's so loud, there's so many people, there's lights everywhere, and you're like, damn, where am I? And I'm bumping into people, and I'm like, hey, Dad, you're in the soybean meal pit. I'm like, oh my gosh, sorry, guys. And I'm looking around, this is awesome. And the guy's like, yeah, wait till you see the other room. I'm like, what other room? And so we walk left, and there's a room maybe at least 5 times bigger. At least 5 times bigger. You're like, whoa! And he's like, yeah, over there is the S&P 500, and behind that is S&P 500 options, the option trading floor. And he's like, come with me, I'm a 10-year T-note guy. And we walk over, and we go to the 10-year T-note area, and I'm like, whoa, this is awesome. Just totally awesome. Totally awesome experience. I don't think they do it anymore, huh? Is weekly pivot point theory different than daily pivot? Well, sorta, but they're all together, right? They're all linked together. But they're not radically different, but they are a bit different. If you search my name on YouTube, like Trader's Way, for example, or Wayne McDonell, or FX Bootcamp, I think I'm associated with 4,500 videos. I've been uploading videos to YouTube since YouTube was a startup. I was a beta tester. And there are plenty of videos teaching me teaching you how to do daily pivot points, for example. Like years of me teaching you how to do daily pivot points. Literally years. Year after year after year after year, every day, day after day after day after day after day after day after day. It's all there, man. It's all there. For free, for show. Have I been to the Chicago Board of Trade? No, I have not. Yeah, I imagine so, John. Yeah, and that's what actually AMFX is like the moving trading places. It was actually quite boring. What I noticed was there was a lot of action at the S&P 500 open. And then literally by like 10, 15, the S&P 500, the big pit, was dead. So people just sat around reading the newspaper, telling jokes, talking like, it was like a sewing circle. Like nobody was trading. Nothing was going on. So I asked the guy that was taking me around, I'm like, so is this normal? And he's like, yeah, it'll be like this all day until the close, and then it'll pick up again. And but it was really boring, actually. And I wasn't sure what to expect getting in there. Like this was the first time I was actually hanging with professional traders. And I left, I was so giddy, I was bubbly, in fact. And I came up with some ideas and all this kind of stuff, and I really wanted to get going because I left there knowing that I can compete with these guys and win. That's what they do, and I know what I do. I can take these guys down. Up until that, I thought they were like mythical, godlike beings. Now, the guy that took me around, he traded 10-year T-notes. And what he did was different. So like the S&P 500 guys, they traded the vol on the open, the vol on the close, and they were done, right? The 10-year T-note guy, he didn't trade on a daily basis. He worked about 10 days every 3 months. And in those 10 days, he was quite busy. And the rest of the time, he didn't do anything. Okay? So what happened was he traded the rollover from one contract to the next. And in the last few days of trading that contract, in the first few days of trading the new contract, right? So he basically worked 1 month. He worked 40 days out of the year, including weekends. So 40, it was less than that. So yeah, he worked about, let's say 30 days. He worked 30 days a year, right? The other 336 days, he did nothing. Nothing, like just literally sitting there, just bored out of his mind. Okay? Anyways, someone wants me to get back to euro dollar. We must be missing something super important. Okay. Okay. Okay, well, if you're a bull, you're a buyer of a dip. Let's go to the other one. Is this one? That's not really one. All right, well, let's go back. Where do we have it? I believe it was here. Oh, I think I had it on Euro scan or dollar scan, didn't I? Yeah, it was this one. Cool. All right. So can we go back to the dollar? Yeah, if you're a bear, you need to sell. Done. Anything else? Does euro dollar have a name? I don't think so. Like cable or something? No. No. No, Foz. I do not. Okay. So nothing's changed since our original plan. This was a sell. This was a buy. This was a sell. This is a sell, right? So nothing's changed, guys. I think we did actually fairly well, didn't we? Cool. Nice Trade says, was he making a lot of money? He was a full-time floor trader for like 25 years, I think. And that's all he did. So enough to keep doing it for 25 years? Yeah, actually, trading is very boring. And it's really easy, especially if you're trading on your own, trading out of your house and stuff like that. You can easily get distracted, or even worse, fall into like lethargy. And you're like, nothing's happening, nothing's happening, nothing's happening. And then you look back, and you're like, damn, this thing's been trending for 3 weeks, but you missed the whole thing because nothing was happening. So it's very difficult to stay sharp. But if you're doing things like the way I teach you guys is we're planning trades 2, 3, 4, 5, 6 days in advance. Sometimes I'm talking about trades 6 months in advance. This is a 15-minute chart. You can see right here. It says 15-minute euro dollar. Okay. So, yeah, if you're planning things 6 months in advance, and my accuracy is pretty good. Watch some of the interviews I've done on FX Street. I'm discussing major changes of trends on specific weeks 6 and 9 months in advance. And I'm like, this week there's going to be a false rally, and then 6 weeks after that there's going to be a real rally, and then it's going to go into consolidation, and then it's going to go to the third week, and then it's going to, like, so yeah. Other than that, the rest gets boring. Okay. Like this, if you were a bull, this is what we talked about before the news, guys. Let's go all the way back. Let's kill this. Okay. Let's kill this if it will let me out. Maybe it won't. You know what? I'll just create a new template, a new chart. I want the naked version. Okay. Before the news came out, when I started the webinar today, I said if you were a bull, you'd buy here. That is so straightforward, it's boring. Yes, trading can be ridiculously boring. What's the complication if you're a bull? Like, why is there complication? Why is it a debate? Why is it exciting? You're a bull. You bought a dip at a roll reversal at a psych level of 114.000. Like, it's so boring. I mean, I love it, but my God, and how much debate did we get from traders in the middle of here, right? When I started, I said, this is where you would sell, this is where you would buy, and guess what? That's what happened. What am I supposed to do? Like, freak out with joy and excitement? I mean, yeah, trading can be very boring. Now, if you are a bear, you're going to try again, right? Where should you try again? Right about there. Boring. Now, I don't know if it's going to fall, but if you're a bear, that's where you're supposed to sell. Okay. You could maybe wait for it to go up there. Okay. Yeah. But this one's better. That's all. Okay. Pretty, right? So if you're a bear, sell here, maybe here, maybe here. Okay, those are 3 trade plans. Okay? Very simple. How long did it take me to do that? Like literally a second, maybe 2 seconds, right? So the rest is waiting, right? The rest is waiting, and that's the very boring part, okay? And then if you're a bull, it goes just back to the same trade plans we had before the news came out. So like I just planned my day in about a minute, right? Before the news came out, we looked at this and said, okay, do you remember? What did we say? This is the trade plan for the month. Everyone with me here? If you're a bull, that's the trade plan for the month. So therefore, if you're a bull, and we're up here before NFP, you want to buy a dip down into here. You want to buy this down into here because you're a bull and you're buying a dip at a roll reversal at a monthly central. I don't know if it's going to go up. I don't. I have no idea. But that's buying a dip in an uptrend at a pivot in a roll reversal. I mean, it's pivot points, it's price action, it's Fibonacci. I don't know if it's an Elliott wave or not. Who knows? But there's a lot going on here, and the rest is quite boring. What I really don't know is if a bear is going to take this. Now, if a bear takes this, it becomes very interesting because it puts a crack in my armor. My confidence is cracked because that ain't supposed to happen. And that tells me there's bears here, and they sold where we said before the news a bear would sell at 114.50. So they sold it. I'm like, okay, but that's just pre-NFP, right? That's just really bulls getting out before the news, and then it dropped. That's fine. So bulls are buying it back now. But if bears sell here, that's a clear indication there are bears in the market, and they want to trade this down. And then I go, whoa, 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 whoa. That's not supposed to happen. And now I start to lose my confidence, which means I've noticed that risk is going up. Okay? Max says, what if your speculation is wrong? Well, you look at the charts or you look at the fundamentals. So quite often I'll predict a move based on, like I did one year where I looked at British GDP, quarter over quarter over quarter. And I looked at a trend over 5 years of quarterly GDP. And then I said, well, based on the data, you add new data, but when you add the new data to, let's say, a 5-year trend, then the oldest data drops off. And I tracked this and I said, well, in 2 GDPs, right, in 6 months from now, we will have a good number because England was doing well at the time, okay? And I'm like, it's definitely recovering from the crisis. So this good number is going to be added on, not the one coming up, but the one after the one coming up. So I'm already thinking 6 months in advance. And that number is based on the current trends is going to be good. So we're going to put that good number onto the new GDP 6 months from now. But also the bad number from 5 years before that is going to be dropped off. Do you understand? So you take a bad number and you take it out of the data set and replace it with a good number. It's the differential between the two. The horrific number with the awesome number is a ginormous change on a percentage basis. So I'm like, oh my God, this GDP is going to be crazy and people won't see it coming. And the GDP number is going to come out hot, just huge. And the world's going to freak out and the pound is going to rally and it's going to be nuts, right? But at least I could explain why. What happened in the 6 months leading up to that new GDP that I didn't see? What happened that I didn't foresee? Anyone take a guess? This was a few years ago. Brexit. Never saw it coming. And all of a sudden, the people started talking about it. I'm like, yeah, it ain't going to happen. That's just radical liberal nonsense. Oops. And that was that. But then you also very quickly realized, once it did happen, that you were wrong. So it didn't add up to losing trades, but what I was waiting for never came to fruition, so you don't get sort of this setup. Okay. But if you trade with me every day, I will teach you about seasonality and business cycles and central banking policies, and you will have a much better understanding of how the foreign exchange market works and how to trade it profitably. Okay. So there we go, guys. Before the news, we said 1450 is where it would fall. I think I had 1413, was it? 1413. 1413 where it would rise, right? I stretched this out a little bit to get the psych level. You know, that's pretty accurate. Here's the first touch. There's the double bottom. And so now if we can get through this, probably on a free and clear plan. Oh, and I went over. I apologize for that. I'm sorry, moderator. Thank you, FX Street, for being wonderful hosts. would you please visit tradersway.com and open a demo account just as a way to pay it back and say thank you for this webinar if it somehow benefited you. Also, like you should know by now, all my chart templates, all my profiles, all my indicators, including monthly pivot points and weekly pivot points and daily pivot points, oscillators, MACDs with 2 lines are all available for free to download at charts.fxbootcamp.com. charts.fxbootcamp.com. Download them. Also gives you a couple of offers for discounts and all that kind of stuff on courses. So wink, wink, nudge, nudge. And that's it. I hope you have a wonderful weekend. I've had an exhausting week. I will be writing a paper on my proposed welfare system for the United States of America. It's a trifecta of universal income, universal health care, and universal retirement, all wrapped around entrepreneurialism. Take care. Peace on earth. May the pips be with you. May your profits be above average. And I will see everyone that has signed up for a Trader's Way demo account or live account. I will see you on Monday and Tuesday and Wednesday and Thursday and Friday and Monday and Tuesday and Wednesday and Thursday and Friday. Well, thanks, Javier, for hanging around for 3 hours and then spamming me with your nonsense. That's really cool of you, bro. Thank you, moderator. Yeah. Anyways, take care, guys. Cheers.